Good morning, everyone. It's Alyssa Corum and Ed Carson here with your market update, where we're reporting to you live from our newsroom in Los Angeles. And on today's show, we're taking a look at Boeing, Target, and Ross stores. But first, let's check in with those major indexes. We are down again today. The Dow leading the losses, down about 2%. The Nasdaq down about 1.8%, and the S&P 500 down about 1.6%. So we're coming a little bit off of the intraday low here, but still heavy losses here again today after a pretty ugly session yesterday.
Yeah, I mean the Nasdaq Composite actually has undercut its stock market lows, the correction lows. So that rally on the Nasdaq is actually is finished. Though the S&P 500 and Dow have not undercut their lows, rally technically is still underway. But you can see the major averages have really been a lot of selling. The market came under pressure a week ago, and we've continued to have losses. So it's really it's a situation where investors should be thinking about being on the sidelines, taking profits if they have any, cutting losses. This is just really not a good environment right now. I mean, maybe things will turn around, but you shouldn't be trying to guess that market.
Exactly, because the vast majority of stocks are moving in the same direction as the overall market. So even if a stock is near a buy point or in buy range, the odds are that it can hold up amid this downdraft that we're seeing is not as high.
We talked about Tesla yesterday, and that one, it didn't close above that thing, and today it's falling lower. I mean, it's not acting particularly poorly, but it's just that it couldn't hold that breakout in this kind of environment.
That's right. Well, tech stocks especially not looking good right now, so we're going to focus on some non-tech names for once that are not looking good today. First on our list, we have Boeing. Those shares are down about 2.2% in heavy volume. It is well off of its intraday low, but Boeing has seen a string of losses lately, and it canceled a call with airlines regarding last month's 737 MAX crash, that Lion Air crash. So that doesn't seem too good. What's going on here with Boeing?
Yeah, I mean, they've had a situation where there was some safety concerns about whether or not that there was some issues that they could have disclosed earlier, and that apparently that they did not disclose until after the crash happened, and so that's raised concerns. And so they're going to do an airline call with the airlines, presumably to air some of these issues out, and then to cancel it. Well, that doesn't look great. I mean, the stock is down really sharply over the last couple of weeks. It had been looking pretty strong. Again, this is one of the situations. Hey, the stock is looking pretty good, and then suddenly it doesn't. And it's also the Dow Jones is price weighted, and so Boeing is the highest priced stock. So even relatively modest losses have a pretty big impact on the Dow.
That's right. And we now have Boeing well below its 50-day and 200-day lines. So it'll take a while to see the stock repair.
That's right.
And taking a look at the retail space, we want to check in with Target after its earnings. Now, it did report a 20 or so % rise in earnings, sales up 6%. That was a deceleration, but that was weaker than expected for earnings, sales, and same-store sales here. And this is heading into that key holiday quarter.
Yeah, I mean, retailers have not been looking good. Even like the retail stocks have been selling off even when the reports look pretty good. And so when you have obviously that just missed across the board, not good sign. Even though Target had been selling off, there was still a lot more to go. I mean, obviously the investors have really lost favor in this, whether it's because of concerns that the economy is going to slow as the tax cuts, the benefits sort of fade out, or at least year over year. But retail is in real trouble. This one is just damaged. It's not a good sign going into the holidays, that's for sure.
That's right, a huge gap down for the stock, well below its moving averages. And we want to take a look at Ross stores also after its earnings, looking to hold above its 200-day line after undercutting that level intraday. The stock currently down about 4.6% in heavy volume, and we have a narrow beat here on earnings, a miss on sales, but along with its peer TJX, it gave cautious guidance heading into the holiday.
Yeah, and that's the quarter you really don't want to be cautious on. And it's just a situation, again, if you had to pick one sector of the retail group sector that you really liked, it would be discount retail, off-price retail, but those, again, have been really hit hard. Ross stores hit a new high just a couple weeks ago. Really heavy losses. Yeah, it would be great if it can hold the 200-day line, but it's been screaming out, sell signals and just, really red flags over the last couple weeks, and with the whole sector out there. So it's just, that's just kind of the market we're in right now.
That's right, and we are analyzing it every step of the way, so be sure to head to investors.com throughout the trading day and after the close for all the latest market news and analysis. And you can also check out our content across social media, from Facebook to Instagram to YouTube to Twitter. And we also have our chat room on StockTwits, so make sure to check that out as well. It's How to Invest with IBD. You can tweet me for more details. All right, everyone, thanks for watching, and we'll see you back here tomorrow.